Alright, good morning. Let's go over today's trade plan. So in yesterday's recap, I mentioned that there was this strong divergence still between the other markets and ES. So NQ and TF are showing relative weakness, and ES is back up near its highs. And that typically resolves in some downside movement ES. That's what we were shooting for in yesterday's trade, and it ended up playing out in the overnight session. Now heading into the open, we're using the 62.75 as the micro bull bear line in sand. So a break below that would indicate sellers in control, at least short term, and bring the 57 to 59 zone into play, and the naked VPOC 56 quarter, and the support zones at 54 to 55. And there's potential that if there's really strong selling, we could head down 50 half to 52 half. And then that zone does have potential to shut off the selling and cap the downside. So in the event of a break below 62.75, the 57 to 59 is an area where we can get a rotation and where it could be a decent bounce. But if you're trading that zone, the way you manage that trade is to look for ES to get back above 62.75. So a small 2-point rotation is not going to be enough. If you're trading that zone to the long side, keep in mind that first of all we need to see some signs in real time that indicate that the zone can hold and reverse ES to the upside. But at the same time, to manage your risk, you probably do want to take a scale out ahead of the 62 half, ahead of the overnight low, and just reduce your risk, because if ES fails at 62.75 and then starts heading lower, we could quite easily go down to 54.55, and like I mentioned, the 50 half to 52 half zone. Bigger picture, we have the bull bear line in sand at 49. So as long as buyers can hold ES above 49, the upside can still play out eventually, and buyers can regain short-term control. So that's the scenario if we break and hold below 62.75. In the event that we hold this level off the open, the first test of 66.75 to 68.75 pre-market resistance will likely still get a sell response. And that's a very key zone on the upside. That's where we built the heavy acceptance in yesterday's session, right? We built a lot of volume around 67.5. And, first test of that level and that zone can still result in a rejection, and there's actually potential that it can still result in a failure as well. That's something we'll have to judge in real time. But if the other markets continue to show weakness, then pre-market resistance could be a spot where ES not only finds some short-term rejection, but it could all out fail and then head down to 57 to 59 and potentially lower. So we do need to see ES above the pre-market resistance zone to confirm that buyers are back in control even in the short term. Right now, overnight, sellers have had more edge, and heading into the open, at least in the short term, we are seeing a little bit more conviction on the sell side. But because the bigger picture is so bullish, things can balance, and we can go either way. Now, if you're watching the other markets in NQ, we want to see NQ get above the 55 to 58 area in order to confirm the potential for the upside scenario to play out. If you're watching TF, it needs to cross at the minimum 97, the high volume node 97, but really it needs to go above 1100 to confirm that the upside scenario is in play. And holding below 97 to 1100 on TF would tell us that there's still some sell side edge in the S&P as well, and we'll look to short on any test of the resistance zones in ES. So that's really the main idea heading into the day. Holding below pre-market resistance can still end up in a push lower. So right now, I'm not thinking any aggressive longs off the open. I'm thinking that with the strong divergence between the other markets, the the safe trade is probably a short setup at pre-market resistance or anywhere near that. And 62.75, I don't know the odds of that level holding up. It certainly can, and if it does, we could get a push up to pre-market resistance and the naked VPOG prior close, gap fill 67.5. But just as easily we can push down to 57 to 59. So I'm going to let the market kind of show some resolution before I enter the trade, just because I don't want to take any early losses on low probability trades, and then have to make it back up on the high odds trade setups. So I'd rather just wait for a good setup to present itself, and be a bit more selective. So I'm going to wait for at least pre-market resistance, or somewhere in that neighborhood, right? If we pop up and test the VWAP midpoint and start failing there, that's an idea as well. On the downside, 57 to 59 is a potential long setup if the internals are looking okay, as in we're not in a liquidation type scenario. But if there's a lot of momentum to the downside, then I'm probably going to let that momentum kind of play out first, right? Let the selling happen, let the tick hit a negative extreme, let price kind of follow and hit a new low, and then once I see some stability in the market, then perhaps I'll get involved. These things are really about reading the market in real time too, right? This is not a automated trading system where we're just blindly entering orders and taking trades. It does require some real-time interpretation and market reads. So let's see how we play out off the open. Of course, a failure at pre-market resistance and a straight move down to 57 to 59 would present a better long setup. So that's something to keep in mind as well. Whereas, if we just kind of chop here at the lows and then break down, it may not be as good of a long setup. So all that stuff comes into play, and I hope the recap videos, at this point we have, I think, over 100 recap videos on the site. I hope that, those videos are helping you with your real-time reads and understanding the type of trade setups that we go for. So it's not a matter of just blindly trading the zone. So let's see how we open. Let's see how we react to 62.75 and pre-market resistance, and we'll take it from there.